I only have one goal with this specific episode, to give you a sharper playbook for buying, building, and owning different businesses. And don't take it from me, take it from Fernando de Leon. And my question to you is, what happens when a holding company thinks like an immigrant, moves like an entrepreneur, and plays the long game with permanent capital? If all this is true, you meet Leon Capital Group. Not too many people have heard of this company, but they born as a modest Texas real estate developer, which is now a diversified holding company that conceives, develops, owns, and operates businesses across healthcare, financial services, and real estate. The guy Fernando started the business 20 years ago with $100,000. Today he's 46, and the whole holding company has more than $10 billion worth of assets. A dozen independently managed subsidiaries. They employ 9,000 people and deliver goods and services to 12 million Americans every day. On top of that, they have a portfolio of European real estate companies. So to give you like an overview of what they have on the real estate side, they have 15,000 apartments, 1.5, it's 15,000. They've developed 300 plus retail locations. As I mentioned, different logistic platforms in Europe worth 4 billion. They also co-founded Crexi, the commercial real estate platform, now powering nearly 2 million professionals each month and contributing 330 billion in transactions. And again, in healthcare space, they built those category leaders in dental space, more than 254 clinics, which is itself worth more than 2 billion. They also developed the first national implant partnership network called Advanced Methastic Partners, which is like a multi-brand platform backing elite practices. Plus, they have patient capital, which brings smarter patient financing to expand across the care. So all this gives you an overview of how to compound through operating. Again, Leon Capital Group, not too many people have heard of this. Not too many people have heard of the founder, Fernando de Leon, but today I'm trying to give you the lessons I learned personally, and to really do it super well, I have to go back to his childhood, because he was born in Texas, but he lived across the river in Matamoros, Mexico. So he pretty much crossed the border twice a day. US school in the morning and small evening school in the evening in Mexico. So kids they worked on the farms in the morning and then had class at night. So it all happened in 1980s and 1990s when the border was super dangerous. And he also said that some kids in the neighborhood were pulled into cartels, which are like organized crime groups. So he had to be alert, like who to trust, what signals to notice, and how to really stay safe. And he learned English pretty late. He was a ESL, English as a second language. And around the same time when he was studying, his dad got super sick and money was very tight. So the big break for him was that the national spelling bee, and that if you do well, they can pay up to $10,000, which is obviously huge for their family at the time. But even though ESL kids weren't supposed to enter, he and his dad studied anyway. And the goal was very simple: learn every word in the dictionary. And what happens? He won the school, he won the city, he won the region, all of South Texas. And then he went to Washington, D.C., where I believe he became second. But between regionals and nationals, his father passed away. So he decided, as I said, still to go there. He lost on the main, the word. The P is silent, as he said. And still came home with about $10,000, which was enough to stabilize the family. So what he maybe learned from this, and what was the superpower, and obviously if you haven't maybe experienced all that yourself, you still want to get to understanding like what he learned from this immigrant mentality. And it's the patterns, not just words. Like studying tons of words trained his brain to spot patterns, take roots, meanings, connections. And he has said it out loudly that later he used that same pattern sense in business and investing, like seeing oftentimes what really drives the deal or drives the market. Obviously the confidence. At nationals, he looked around and thought like, I can hang at this level. And that belief like stuck and compounded over time. 2 rule books every day, like switching between US and Mexico, doing it daily, taught him to read 2 different operating systems, which is obviously very important in the business. And again, like hard childhood, which gives you this super strong drive, like you don't want to lose. And the idea he said, which he took from Churchill, tough childhoods can create strong people because hardship pushes you to improve your situation. How Fernando was able to turn cash into capital, because he didn't have too much money, but he had his language skills. So when Fernando was about 14 and finally fluent in English, at the same time, US companies are opening factories in Mexican border towns after a trade deal called NAFTA. And he gets hired as a translator for developer building a textile factory. So the real problem there wasn't like buying land or getting a bank loan. The hard part is getting labor and union permits so the factory can legally hire people. And Fernando was like, again, he was 14, but still decided to take that hard, messy part nobody really wants to do. And he gets the permits. At closing, instead of taking a cash fee, he has to turn his fee into ownership. So he got about 5% of the building. Lesson learned. He repeats this 5 to 6 times with between ages 14 to 18. Those small ownerships pieced and sent him checks over time, like mini rent and different profit checks. But later, those smaller ownership pieces paid him a bit of cash, bit of dividends once in a while. But the big difference was that when he was able to sell those slices back to those developers for market value, this is where he made his big money. And he said on the summary that after that, we were never poor again. So the very big lesson for you and what we can learn from Fernando is ownership keeps paying you over time and can be sold later. A one-time fee is gone once you spend it. This is something he says in various interviews as well, where people and his kids as well asking for advice every time he says that you should be trying to own some type of asset, something you own, because those one-time fees are not enough. So again, ownership keeps you paying over time and can be sold later. A one-time fee is gone once you spend it. Then Fernando went to Harvard, but he says that the name wasn't the important part, it was the ideas. He arrived there as a street kid and used college to really train his brain. He took those big thinkers, Kant, Nietzsche, and the goal was to really like how people think. So again, then he studied evolution and animal behavior. And in a chimp lab, he saw chimps trade things like food, status, and respect. And he realized that humans do the very same thing in business and negotiations, just with different currencies. Take money, titles, speed, recognition. So his massive takeaway was that if you find out what each side really wants, you can make deals where everyone feels like they won. What he took from there is those fancy logos, like a famous school, Harvard, for example. These are just brands, and they can trick people into thinking someone is great without proof. So this was a big one for him because he had this super rough background, and he saw that these logos and people, oftentimes they weren't that tough, which he thought. And he also said that when he hires people now, he doesn't even ask about schools. He looks for people who are tough, who are gritty, who are scrappy, and the ones who can solve hard problems under super high pressure. And the great quote I took from here is, hire for outputs under pressure, not inputs on paper. After Harvard, Fernando worked at Goldman Sachs around 2001. He didn't really love the job, but he got to see the pipes of money, like how money moves. And because once you see those pipes and understand how money moves, headlines like Blackstone bought the building makes much more sense. I'm trying to explain this to you to really you understand like who's paying for the building. So first there are those teachers, firefighters, and those colleges who save money for the future, and they put this money into pension funds. So those pensions, endowments, they give chunks of money to a fund. Imagine like a fund, let's call it like a fund 7. This fund 7 has a GP, a manager who runs this fund, and they pick deals. And now the magic part, they charge fees, which is a salary for managing the backpack, and they also charge a bonus called carry if the deal make good profits. So the GP might be owned by a public company actually. Its stock sits in index funds and mutual funds, which are also funded by those same pensions and savers. So there are people with deadlines, the folks inside the funds, managing directors, portfolio managers, who don't personally own the building, but they're paid to put money to work and hit goals like invest X amount of dollars before December 31st, close deals before quarter end, and maybe grow your assets under management to X amount of millions or billions. So every time when the deadline says Blackstone bought it, it usually means a specific fund inside Blackstone with the deadline and the bonus targets decided it should buy it right now. So why this mattered to Fernando and why it might matter to you as well is, in Fernando's case, during the 2008 financial crisis, banks wanted to clean up their books fast to look safer by quarter end. And I'm going to talk about this in a second, where Fernando bought a $6 million loan for $3 million. And the bank even loaned him $2.5 million to help him buy it. This is called seller financing. Why would a bank do that? Because their incentive was to get the bad loan off their balance sheet quickly. Even if the price was low, he gave them speed and certainty. We take Fernando. And later, when the debt markets got super tight, think of it like a bad weather, Fernando built his own financing for customers inside his companies so growth wouldn't stall. And this is why I decided to do this episode. Like, there's no one really sharing those lessons which they learned working to those big Ivy schools, great Ivy schools, or those massive companies. For example, I don't have a Goldman Sachs background, but the fact that Fernando was willing to share what he learned working for Goldman Sachs, like how money moves and how those big huge funds actually work, it makes so much sense, and that's why I want to share this. And same thing when it comes to those logos and brands, like for example the Harvard, like the fact that you have graduated from Harvard, it matters, but it actually doesn't matter that much. And me personally, not having this Harvard education, it shows that I can do stuff, and I'm actually doing stuff because I learned those lessons many years ago when I'm studying in Switzerland. Like, these are not special people. I thought they are special, but they're all normal people. So once you see that with your own eyes, you start believing more into what you're doing, and most importantly, like who you are as a person. And I mean, with enough grit, with enough hard work, you can partner those super smart people and you can do wild things together. So this is the reason I decided to do this episode as well, to just share those lessons which I learned from Fernando. So, and the question for you as well, like, or not the question, but the fact that the next time you see like a huge title or a big deal headline, ask yourself those 4 questions, like which fund, like who bought it, what's their clock, do they need to invest year end, or do they have to finish this deal quarter end, or another question like what are their incentives, like fees, bonuses, promotion goals, and what's the market weather? Are lenders eager or scared, or are they pulling back? Because when you know those answers, crazy prices start to make sense. Next destination for Fernando was going to a new city. He decided in 2003 that he moves to Dallas with very little money. His bet was that this city is going to grow, and it's going to grow a lot. So he earns trust by fixing car problems on properties nobody else wanted to do. So one big example, an older owner, Harald Pullman, has land nobody can use because it's a flood map. There's a creek, so the government says you can't build there. So Fernando says, let me try. He can't afford big fees, so he convinces engineers to work only if the plan succeeds. They get paid when it works. He works with FEMA, which is the agency that handles flood maps, to move the flood line so building is allowed. Obviously, this takes a long time, but it works. So he already had the land reserved, called an option, for about $800,000 to $900,000. That means he had the right to buy it later at that price, but he didn't have to do it. After the flood map is fixed, he draws up about 65 approved building lots on paper. No construction yet, just officially approved. Then he sells this contract to KB Home, which is like a big home builder, for much more than his option price. He pays the engineers extra because they took the risk with him, and everybody wins. And again, if you as well, like those big builders, would be only happy to pay ready to build lots, And you may also love owning real, durable businesses that compound without maybe running them day to day, like getting someone else doing all the work. If all this is the case, you should go and check out CapitalPad. CapitalPad gives accredited investors access to curated SMB acquisitions, the kind led by searchers and independent sponsors buying those established, profitable companies in sectors like home services, healthcare services, light manufacturing, IT, and many more. How it works is you see a full deal room, take financials, tax returns, sponsor profiles, the value creation plan, and you can co-invest on a per deal basis with minimum starting at $25,000. There are no management fee. CapitalPad only participates if investors get their capital back and profits are earned. So these are those long-term illiquid investments, and they involve risk. If you want to learn more and maybe apply, go to capitalpad.com. That's capitalpad.com. Now, down cycles reward speed, not perfection. What happened? In 2008, during global financial crisis, the big money panic. Banks were scared and wanted to clean up their books, and they wanted to do it fast. So Fernando's position, he had nothing that could trap him. He'd sold most deals earlier and kept just one safe apartment. So he had some cash, but what he said on one of the interviews as well was that this was the period where he really thought that maybe it's time to go back to work for someone else. But it was his wife who kept saying that you should be doing what you're doing because you're good at it. And I don't want you to stay at home. I don't want you to be at home. You're annoying. And yeah, Fernando was laughing when sharing this journey, because imagine sometimes, like, when Fernando would not have taken those next steps, which I'm going to share to you right away, we would not have like a huge holding company. So for you as well, like a lesson, like listen to those people who know you, take your partner, your wife, your husband, listen to those people. They want good for you. And you never know where their words of wisdom or words of motivation could take you. Because in Fernando's case, it took him to build like a huge holding company. So his game plan next was he called a couple of trusted backers. One was an older billionaire who basically said yes before being even asked anything. And then for about next 4 to 5 years, he did tons of quick deals. And his line on this was, I went all in 200 times in a row. So what those deals look like, giving you examples. Buying bad loans from banks and doing it cheaply. Example, a bank had 6 million loan. It didn't want. So Fernando bought it for 3 million. And bank even loaned him 2.5 million to help him buying it, seller financing, because they wanted to get it done fast. This was the lesson he learned from the Goldman days. Next one were tiny, like weird deals big companies really ignored. For example, like a 24 condos in a rougher area of Dallas, bought from a California bank for about $3,500 each. He then fixed each one, spent like tens of thousands of dollars on repairs on each, and then he sold them for around $160,000 each. Again, do the math. 24 condos, you buy that for $3,500 each. You spend tens of thousands on repair on each, but then still you're selling them for $160,000 each. He said on the interviews as well that he don't believe that such deals ever come back, but who knows? So the secret here is that move fast and don't maybe chase this absolute max. This is something he brought out as well. Like he often took a good price now instead of waiting forever for the perfect price later. Why? Because fast cash back lets you buy the next great deal. That's how he did like hundreds of deals from the year 2008 to 2013, and many returns were 10 to 20x, because in chaos, speed is valuable. And when doing those deals, he talked about brokers and how one should take care of brokers. And from the year 2008 to 2013, Fernando had to clean up lots of messy loans and properties, and the brokers who helped him then are many of the same people he trusts today. And his rule is very simple. If a broker brings him a real opportunity, he cuts them into the deal. Not just a one-time tip, but a share of the win. And when those brokers had, for example, life problems, take tuition, divorce, different emergencies, he showed up and helped them. within the rules. And he treated them with respect. So, and what is the result of this? Those relationships lasted 10 plus years. So when he wants to buy or sell now, he doesn't cold call. He calls friends who already trust him. What is the lesson here is that loyalty in your deal supply chain can be a compounding asset, like paying fairly, paying quickly, and sharing the upside with people, with brokers, and doing this like with a positive flywheel. Brokers start bringing you different deals, like good ones. You will be their first call. They will solve problems for you, which otherwise would take you a lot of time, a lot of money. And as a result, again, you save time, you save money, you find great deals, and your certainty premium becomes your brand. So how would Fernando compound relationships at scale today? It would be his personal or group level newsletter, sharing everything they're building, deals they're doing, even when being super busy. So same advice for you. Try to build relationships at scale. And that is why I partnered with Spacebar Studios. They build and scale B2B newsletters, so you can stay top of mind with the people who matter. Take it investors, operators, brokers. And what Spacebar Studios does today is they're offering 3 HoldCo Builders listeners a 2-week free trial. They'll set up your newsletter, send your first few editions, and prove this channel works. And they do it with no fees, with 0 risk. And who knows here? Because by actually doing this, maybe you as well start getting great deals, great people, operators, investors coming to you. So there's only one way to find out actually. Start your free trial today by going to spacebarstudios.co or just hit the link in the show notes. Again, spacebarstudios.co or just hit the link in the show notes. Now, the story on how a simple lease became 265 clinics. First, you have to understand, I'll explain you how PropCo, OpCo works in friendly terms. PropCo, property company, you owning the building, and the OpCo, operating company, you own the business inside the building. So his steps: own good buildings in good areas. Watch which tenants, for example, like businesses, are winning. We know like good sales, good margins, and then help them open more, oftentimes in your own buildings, and ask for a slice of the business ownership. So over time, if you do this, you own both. You own the real estate and the big, well-run company that operates inside it. So how owning the building helped him to build a huge business. So the simple story: Fernando once bought a tricky shopping center at an auction. It was very hard to rent out. So a pediatric dentist, kids dentist, agreed to rent the space. And as a landlord, Fernando could see how the dental office was doing. Their sales grew about 2 to 2.5 million a year. That told him the location and customer base, which are families with kids nearby, that they were great. What he did next, he helped the same dentist open a second office in another space he owned. Part of the build-out money was landlord money he had to spend anyway to get the tenant set up. So his next smart move, he helped the same dentist open a second office in another space he owned. Then he bought both dental offices, 2 to 3 locations, from the original owner and kept growing from there. He did 2 things over and over: open new locations from scratch and buy small dental groups and add them to the company. And over time, this became about 265 clinics, which itself is a multi-billion-dollar business. A leader named Chris Scales grew into the CEO, running the whole thing. So what is the secret edge? The same map he used to pick great spots for fast food or banks also worked picking great spots for kids dentists. So all this experience you have from your previous investments, deals, your work, where you study, you just have to give it a bit of time, and all those lessons will pay off eventually. In Fernando's case, every time he learned something, he just did it, and this same playbook, he just repeated it in other healthcare businesses. Med spas, he bought a small group of 5 to 6 locations, backed the star operator, in that case Nicole Caramante, which he calls her the LeBron James of med spas, and again scaled it big, like opening new stores and buying others, often letting sellers keep a small piece so they really care about the future as well. And same thing, a medical lab. One of his warehouse tenants went bankrupt. they couldn't pay the rent, which threatened his mortgage. So he bought the lab business, fixed it up, kept the rent flowing, and then sold the lab to a larger company. So the simple idea. Next is the very simple idea. If you have a problem, when outside companies make your business slow or expensive, build that service yourself. First use it to your own companies, then sell it to others. Obviously, to do it your own companies, you have to have enough size to make it really work. In Fernando's case, the patient money and how he helped customers pay. In his dental implant clinics, some good patients were still getting denied by big lenders. And not because they were bad, just because the finance world was becoming more and more strict. So what Fernando did, he asked, what does it actually cost us to do one implant? So example, if the clinic's fixed cost to do an implant is $6,000, take staff, room time, tools, and the total price is $20,000, then ask each patient for a down payment of $6,000 to $8,000, which is enough to cover those fixed costs. And now the clinic can safely finance the rest, the remaining $12,000 to $14,000, with monthly payments. He did the exact same thing and built an in-house lender called Patient Capital. So the clinic itself gives the loan to its own patient. He started very small with super clear and strict rules, but over time, the patient, they keep paying because the down payment has already covered all the fixed costs. So all the rest, $12,000 to $14,000 with the interest will make your company super valuable. And because of the patients were already coming in every single day, the loan volume grew very fast. And the biggest and the smartest thing probably from this is that patient get treated. You don't need to worry about the outside lenders. The clinic covers its costs upfront. Remember the 6 to 7K needed to cover the fixed cost. And the business controls its own growth instead of waiting on outside lenders. He did the same thing with insurance, like by simply stopping overpaying middlemen. And on the real estate side, insurance bills kept going up and eating profits. And he said, what if we broker insurance for ourselves? So he hired a bro, started an insurance brokerage, and placed policies for his own buildings first. That saved about 6 to 10% right away. Once it worked in-house, they offered the same service to other owners, starting with healthcare friends, and now it's a standalone business in the portfolio. And the pattern he repeats again and again. If a vendor makes things too slow or too pricey, take lenders, insurance, equipment financing, become that vendor yourself. And first customers, your own companies. It's safe and you know the demand. And after it all works, you can just simply sell the business to others. And now one of the portfolio companies, the technology companies they have, Crexi, they really built the platform they wished existed. So Fernando once bought a shopping center at an auction. The auction guy, Mike De Giorgio, later comes back with a wild idea on a napkin. Let's build the opposite of an office building. So the question from Fernando was, why opposite? Because Fernando doesn't like owning office buildings, because when a tenant leaves, you must spend a ton of TI, tenant improvements, to fix the space for the next tenant. And that kills your cash flow. So what's the opposite of spending a bunch of every time someone moves out? It's a software and data. So their napkin plan with 3 simple parts. It's data and market intel. Make a live scoreboard of the market. Real prices, real rents, and real recent deals. So brokers and owners see the truth instead of guessing. Number 2 is auctions. Run fast, clean online auctions for properties. Great when a seller needs a date certain result. And the last thing is listings, Crexi Pro, a broker-first website to post properties, collect buyers, and manage interest. Basically, another lane besides the one giant site everyone felt forced to use. And what happened next? Fernando said yes and wired the seed money. He kept backing Mike as the company grew. Years later, Crexi has around 4 million people using it each month to pull comps, run auctions, and list deals. The secret sauce? Machine learning and AI, which really cleans messy data from lots of places and turns it into useful info, which they are using when doing their own property acquisitions, real estate acquisitions. And the ownership today, Fernando has put a lot of his own money and time into this. Obviously, there's venture capital firms now invested, but they haven't sold the company and they really believe they can go public one day. So if this episode helped you, please share it with one person who matters to you. Could be a partner, could be a founder you believe in, or the next operator in your life who might need those valuable lessons. And make sure you follow, make sure you subscribe to the HoldCo Builders podcast right now so you don't miss the next episode, because next one is I'm going to sit down with a gentleman who started small and now closes acquisitions north of 450 million. His model works and it works so well that he has 3 offices, 1 in Miami, 2 in Europe, and he lives a good life, and you'll enjoy this playbook. So again, I'm glad you spent time listening this HoldCo Builders episode today. Again, follow, subscribe, send it to someone important to you, and thanks for listening, and see you in the next one.